Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. The article does not go into the price per gram that these companies are expecting to sell in the future. I believe Canopy Growth is expecting to sell a bud, piece of flower, for $1.73 per gram, and that's not sustainable long term. In Washington State, we've seen companies go out of business selling their entire lot, hundreds of thousands of grams, for as low as 7 cents. I would look at sales like that. I would look at 420 sales as being the future prices, and I would look at the lowest price of flower being the future wholesale price. So if we're already seeing 7 or 8 cents a gram, in the future, I would imagine that that's going to be a wholesale bottom low, kind of a B grade price point for material that you would use for edibles and extraction and other products that don't require an aesthetically pleasing bud. Having said that, if these companies like Canopy are expecting to sell at $1.73 in the future, they're probably not going to be around very long. I remember when Time Warner merged with AOL and they said it was going to be the best thing in the future, and neither one of them are relevant anymore. I tend to think that these 4 companies up in Canada are all going to become some of the first companies that go under. They're over leveraged. They're not pricing cannabis at a rate that's sustainable in the future, because that $1.73 is going to drop down to 50 cents really fast. And if they're not prepared to take on that kind of wholesale pricing, then they're already in trouble. Speculation is obviously pushing these prices higher, as well as being included into these various indexes and ETFs, all pushing up their market cap. But as individual investors kind of flee from other investment vehicles into cannabis, it's anybody's game. So invest wisely. On the market front, we saw some of the biggest cannabis companies in the world report their quarterly results. CannaTrust Holdings posted a quarterly revenue of $16.9 million, up 115% from the first quarter of 2018. 67% of that growth came from the medical channel, while a third came from the recreational arm. Tilray posted an adjusted loss of 27 cents per share on sales of $23 million. Revenues surged by 195% on the year, above estimates of $20 million. Aurora Cannabis reported deep losses on a year-over-year basis on net sales of $65 million versus $16 million in sales in the third quarter of 2018. Top cannabis stocks with a market cap above $500 million trading on U.S. exchanges performed in the following. Acreage Holdings is down 8%. Afria is down 5%. Aurora Cannabis is up almost 4%. Canopy Growth is down 6%. Kronos Group down 3%. Curaleaf Holdings down 16%. Green Growth Brands down almost 10%. MedMen down almost 5%. Organigram Holdings is up almost 13%. Private companies continue to drive cannabis merger and acquisition activity. The number of completed M&A deals in the cannabis space remains significantly higher so far this year compared to a similar period in 2018, and private companies are largely leading the way. While overall number of deals is almost up 40% year to date over 2018, transactions involving private companies have nearly tripled from 15 in 2018 to 43 so far this year. Top raises that closed last week include Ianthus Capital, a New York-based multi-state operator, raised $25 million through a convertible debt transaction. Growth Industries, a private-held Rhode Island-based manufacturer of cannabinoid-enriched products, closed a private placement equity raise for $17 million. CannTrust, the Ontario, Canada-based cannabis producer, closed on a $170 million equity offering. And Phoenix-based Forefront Holdings closed on a $50 million loan to build cultivation and processing facilities linked to its planned merger with Vancouver, British Columbia-based CanX Capital. Top M&A deals that closed last week is Tetra Biopharma, an Ottawa-based medical marijuana-focused company, acquired fellow Canadian group Pang Pharma. The deal involved payment of $3 million Canadian dollars and the issuance of more than 16 million shares. Top merger and acquisition deals that also closed include Brooklyn, New York-based Better Choice, closed on 2 deals specializing in the CBD pet food industry sector. The valuation of the acquisition of TruePet and Bonafide were not disclosed. And then also NIC, the Kansas-based provider of digital government services, closed its acquisition of Denver-based Complia, which provides a technology platform for government regulations of cannabis companies. Canopy Growth closed its acquisition of Germany's C3 Group for roughly $253 million in an all-cash deal. The deal is one of the largest in the European cannabis industry so far. The cannabis sector has come under some pressure this month. Last week, the Horizons Marijuana Life Index ETF and the ETF-MG Alternative Harvest saw a negative price action of 1.4 and 1.8% respectively. Equity capital raises were the key trend of the week as the cannabis space recorded the third highest weekly amount raised so far in 2019. In total, almost $290 million was raised through equity deals just 2 weeks after the second highest week of the year when $473.5 million was raised. 21 deals raising $354 million closed this week. That compares to just 5 deals raising $44.8 million in the same period last year. Aurora Cannabis, an Edmonton, Alberta-based cannabis producer, reported fiscal third earnings revenue of 75 million Canadian dollars, up more than 365% from a year ago. The company's net loss grew to 158 million, up from 19 million a year ago. The boost in sales was fueled by growth across key markets, the company said in a news release. The revenue attributed to Canada's adult use market grew 37% from the previous quarter to 29 million, while medical cannabis sales grew 29 million, up from 12% from the previous quarter. The surging red ink reflects the company's obligations to reevaluate the convertible debt it carries on its balance sheet, resulting in losses of 101.5 million. Tilray's revenue was also up and its net loss grows on spending. Tilray, the British Columbia-based cannabis cultivator and distributor, reported revenues of 23 million for the first quarter, up 195% from the same period last year. The company's net loss, however, widened nearly sixfold on higher spending. Tilray, which reports its earnings in US dollars, said in a news release that the sales gain reflects the legalization of recreational cannabis in Canada last October, the addition of hemp food sales via Tilray's acquisition of Manitoba Harvest, and strong growth in international medical markets. Tilray's net loss for the first quarter was 30.3 million, widening from 5.2 million for the same period in 2018. Tilray said the increased red ink was mainly tied to investments in future growth, the purchase of Manitoba Harvest, and the expansion of the company's international teams. The Alternative Harvest Index, the ETF-MG Index, is a portfolio of companies. There are currently a couple of exchange-traded funds or portfolios of companies inside of them where you can buy those to kind of cushion your risk, if you will. There are a couple of indexes that exist right now for a portfolio of cannabis companies if you don't have the risk tolerance to invest in a single company. There's the ETF-MG Alternative Harvest Index. It's an exchange-traded fund. It was up 48% year to date. If that didn't give you enough return on your investment, there's some leveraged funds that are just coming out. So Canada is getting the first. These leveraged and inverse ETFs already exist in the real world. Direction is one of those. You can have 2 and 3 and 4x movements. So for every movement that the S&P makes, let's say it goes up 1%. If you have a 2x, it's going to go up 2%. And likewise, if it goes down, if the S&P goes down 1%, your leveraged or inverse ETF is going to go down twice as much if it's a 2x. If it's 3x, it's going to go down 3x or up 3x. It's going to move with the market at triple the speed or double the speed. In this case, it's a 2x inverse, 2x leverage. And so if you want to bet against it, that's your inverse. If you want to bet with it, that's your leverage. And so this 2x ETF is going to give you even more momentum. So if you would have invested in this, had it been available at the beginning of the year, and you were to bet on the ETF-MG Alternative Harvest Index, for example, it went up 48%. That would have doubled it at a 2x leverage rate. So although it's an interesting opportunity, I think a lot of people are going to crash and burn if or when there's a correction. But in the meantime, if you're smart about it, if you set up a trailing stop loss at say 5%, then if or when the stock dips, corrects, drops, whatever, at 5%, it'll trigger that. And then the next moment it comes down, it'll sell it. So if you have the option for a trailing stop loss, definitely look into that. These are some good gambling options. If you're wanting to put even more money down, great on both ways. You can straddle that. You can place bets against and with it. You can place bets with and against the market at the same time. So if you got money to burn and you like to gamble, this is going to be hot. It's the first inverse and leveraged cannabis exchange traded fund Already one of the world's largest markets in terms of sheer number of cannabis exchange-traded funds, Canada is breaking new ground as home to the world's first inverse and leveraged marijuana ETFs. So the Horizons ETF management said that it's preparing to launch a leveraged cannabis ETF and an inverse cannabis fund on Friday. The Beta Pro marijuana company's 2X Daily Bolt ETF will lock to deliver double the daily inverse performance of the North American MOC Marijuana Index. The index tracks the daily performance of a basket of North American publicly listed companies with significant business activity in the marijuana industry. The Beta Pro Marijuana Cannabis Inverse ETF is designed to deliver the daily inverse performance of the North American MOC Marijuana Index. So if that index declines by 1% on a given day, the new Horizons ETF should rise by 1%. Horizons offers 10 double leveraged bullish ETFs and 10 double leveraged inverse ETFs and 3 non-leveraged inverse ETFs. The North American MOC Marijuana Index tracks the leading cannabis stocks operating in the US and Canada. Constituents must have a business strategy focused on the marijuana or hemp industry and are required to meet minimum trading criteria. Top components of that index include Canopy Growth, Aurora Cannabis, and Chronos Group. Some of the top cannabis investment drivers have been multi-state operators, data, and consumption lounges. And then trailing right behind that has been accurate dosing and technologies surrounding getting that precise dose so that people can really start to understand what outcome they should expect. Jim Cramer is telling investors they should take cannabis hype with a grain of salt. He said, whenever you see this kind of boom, you'll need to take a more exuberant pronouncements with a grain of salt. He called it reefer madness, and that companies like Tilray have never seen a major negative catalyst and that its stock should never been so high in the first place. While some of the stocks of cannabis companies have performed much better than others, such as Cramer's favorite cannabis pick, Canopy, many have been too promotional for his taste. Looking at Tilray, Cramer noted that the stock shot from $100 to about $300 within a matter of days last October prior to legalization in Canada. The stock collapsed to $100 a month later and has since drifted below $50. And with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out.